Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the first day of November 2017. We're about 345, so the final prices aren't in yet, but they generally finish up right in this area. And settlement prices in many markets have been determined. They just finish up the trading. So overall, you've got a stock market that looks okay in the Dow and the S&P, but the NASDAQ gave back some along with the Russell. The Russell got hit probably the hardest on a chart look. All the metals got a bit of a bounce. The FOMC statement came out today. Absolutely no change in what the Fed is seeing. They're not seeing changes in inflation. They're still talking about the rate hike in December. But who's going to do that hike? Because we might get a whole new looking Fed board. Remember, there's still some vacancies, not to mention the new chairman that was going to be announced tomorrow. I said new. It may be Miss Yellen. I am one that says if it ain't broke, you don't fix it. And she's done a pretty good job, but that's my opinion. We'll see how the markets react to whoever is chosen by the president. The other event of the day that the market didn't like was we were supposed to get the tax reform bill. So we didn't get it. So there's some horse trading going on, and markets don't like that. There's still talk they're going to limit the $18,000 a year 401k contribution back to $2,400. They're still fighting, and this is in the press, so I don't know how accurate it is. They're still fighting about deductions for state taxes. Can't tell you what that means. Remember I told you at the end, all the lobbies, they're pretty powerful. Everybody's fighting for something, but remember this. It's a bill. It's not law. They're going to try to tell you they can get it done by the end of November. I go, no chance. Wait till the real infighting happens. I think we'll be lucky to get it at the first part of 2018. But what we get is going to be the key. Are we going to be happy with it or are we going to hate it? I don't know. We haven't seen it. When you go to the NASDAQ, I decided to add the 18-week moving average to the weekly area chart of just closing prices. You can see how long the market has been over that. Once it basically got over it, you had a couple of times back here in November of last year where you got under it. It's so unusual to see a market week by week just not getting underneath or back over, whipping around an 18-week average. But that's what we've had. We've had the bull market that never ends. When you go to the daily area chart of closes, as you can see, you had one pullback here in October-November timeframe where you went back to the 18-day average of closes. And I'm talking, this is an area chart of closes only, not highs and lows. And the market has roared from there again. When we come to this chart, you can see you had a correction today, but it wasn't a big damage to the chart, just a correction. You'll also notice that so far, since this break low, you have had every day with higher lows. You haven't had a lower low day yet, and that's in how many business days? 1, 2, 3, 4, 5. That's a full week. So far, 5 full business days without doing that. When we look at where the market's at in relation to both key averages, okay, still bullish. The market's over both. And today what the market did is it's fighting its battle to get back under the, upper Bollinger Band. Hooray! The market now, by doing this, if it can close there, is what? You had 3 days up and over it, and you pulled back. That should not be a surprise. As you know, my theory on Bollinger Bands is that, in fact, it's not my theory that it will trade 95% within them. That's John Bollinger. My theory is that you can take each one of those days that it's outside of a band consecutively and count them as one of those percentage days. Can it go beyond 5 of them? Yes, I've seen that. But what you're always looking for in charting is what's more normal than not normal, and staying more than 5 is absolutely not normal. In the momentum, you haven't given up anything. You're just overbought, and today both numbers suddenly got over 80. You do realize if you get 3 days of that, it's called embedded. You lock in bullishness, and often, not always, often that leads to even higher prices for whatever term it's going to last. Doesn't mean it has to happen. In the Dow, you have these embedded readings, and you can see the market has been doing that, and this has been embedded since back here. So there's the theory of how that works. Now, if the red line closes under 80, I'm the first to say you may get right back to that 23,107 zone, the 18-day average of closes. In the S&P, you're just staying overbought. You keep going into the area of these upper Bollinger Bands, and you can't push it out. The market's narrowed in that trading band, so it's waiting for an event. Could that event tomorrow come with the tax bill, new Fed chair, or the same Fed chair reappointed again? Yeah. I don't know how the market's going to react to it, but you're looking at that. You got the Bank of England going to announce its monetary policy. We're going to get then the jobless claims, then the big jobs data is coming out. But the Fed generally knows things. And the Fed has said in its statement today that it's plain not seeing job force inflation yet. I'll believe that that's the right number that they're coming with. Now, here's the market that I pointed out yesterday. Look at how narrow this has gotten, and look what it did. It went today all of a sudden to the top of the upper Bollinger Band, reversed, has an outside day down, goes under the band, and comes back and settles just about on it, slightly under it. Momentum pointing down. If you take out 1483.40, you break the bull trend, but you can't start a bear trend because you'll have a higher high and a lower low in terms of the swing line. Doesn't mean you can't break out to the downside and finally get a correction. This market throughout the first real warning shot before, when it pulled back, and it's doing it again. I don't know if the other markets will follow suit, if they'll say this one's right or wrong, but we're going to see. Obviously, the tax bill will affect these markets. In the VIX, you're on the neutral territory. You're stuck at this 18-day average of closes. You have higher lows. You've got higher highs on that average. It's pretty neutral. And momentum still pointing down, but oversold. In TLT, you would expect that going into today, interest rate futures would have gotten fairly neutral, and they did. You had a big yield increases, and now they gave that back, and they're just sort of sitting here. We're probably waiting to see what the tax bill looks like and who is the next Fed appointed chair. And from there, I predict this market will start getting more volatile here. Same thing in the futures. Notice how now for about 3 days you're at this 18-day average. Admittedly, you have a pattern of higher lows, higher highs. That's bullish. The resistance zone is the 100-day average at 153.16. You didn't quite get there, but you're going to get reactions one way or the other with all that data coming out tomorrow. You got a flip-flop of that in trying to get a reversal to the downside in the 10-year note. So the 30's going one way, the 10 another. Interesting. Dollar index still higher lows, higher highs, overbought, uptrend, resistance 94.93. Euro currency downtrend, lower highs, lower lows, oversold, support 162.21. This market is what? It still looks to me like the dollar's bullish, the euro bearish, but there's a huge but. You got to be a bit nervous in front of all the data coming out in the next 2 days. Aussie dollar still very much in the bear trend, lower highs, lower lows, but oversold. Is it going to embed here? Well, if you look at this, it's just oversold. So you can't embed when you got to 3 days in a row, both numbers under 20. We'll just call it oversold. All these currencies are likely to be impacted tomorrow from Fed Day, as I'm going to call it. All you did in the yen this week is rally up to the high here and back away. You know, there's two currencies that are standouts that want to keep easy monetary policy, the yen and the Swiss franc. And those are the two currencies that we're going to see tomorrow, how they react to whatever our Fed decides to do. In the Brent versus WTI crude, look at this, $6.99. That's pretty strong action, my gosh. Okay, so you got a $7 a barrel difference. I was reading today that the oil sands in Canada, at $54, they're still not making money, and they're looking for reductions in next year's production. You have certain production there that they're saying might pick up because you had projects under work and they're coming online now. But they need closer to $60 in some of the analysis, and we're only $54 for the WTI brands. When you look at the Brent, you can see you're running on this upper Bollinger Band at this point. I think it's 3 days in a row over it, but you have an embedded reading, so it's still quite bullish. Nothing changed there. You're backing off against the upper Bollinger Band in the WTI. You haven't lost the embedded reading. You had a correction on it. That's the best that I could say. Gasoline, it's been doing this with the embedded reading. This is the power of embedded readings. You know, they move on. Sometimes they don't let you back in, so you've got to learn how to play them, and I teach that in my charting course, at least my philosophy about it. I wish I could tell you I walk on water, and that's how it works all the time. But market's riding it, embedded reading, trend up, still powerful. Here's the market that's come down, and the question now in this market is what here? And that's going to be the big question. It's already into oversold territory, cold weather moving through. Maybe this market, just maybe, it's getting to the point where it might get a bit of a correction. No way to know. I want to remind you, if you look for seasonal trades, one of the ways to do it is the Moore Research Center. And what I find fascinating is their 2-week trial. You're going to get a user ID and password. Then you're going to be able to see on a month-by-month basis all kinds of different trades. And I mean, it can be spread trades, it can be bull trades, bear trades. Then you get to work, and this is the seasonal spreads, what they'll look like. It gives you a date, and it tells you what the percentage has been if you enter on this day and get out on that day. Let me give you a warning, and they'll tell you the same thing. Because something worked in the past does not mean it's going to work in the future, and nothing looks into the future. But you get a probability. And that's all that it is. It's another trading tool. And it's a really good one. And what I like about it is I can use this, and then they have write-ups on it, but they have interactive charts that I often go to. And I'll look at bull years, bear years, 5, 15, and 30-year look-backs on the market. So you get to play with these, and yes, they're live. So as you put your cursor over them, you get an idea on a day-by-day, week-by-week basis, what has the pattern been? And I like to combine patterns of different ones to see what the seasonality has been. Is this year acting worse than another year? You know, people don't realize, for example, we're talking gold here. It is up 10% for the year. It's certainly not up 15% plus like the S&P is up, but it's up for the year. Okay, how does it finish the year? Well, you might want to go look at some of this to get an idea. And how you do it is really simple. As I said, they make available through us. They're different reports. You have access to it. And you get it by calling us at 866-973-2077. You can go to our website, sign up for it. We'll make sure that we send them your name and everything. You'll get your user ID and password. Same thing up here. If you're watching me on YouTube, click that icon. Or underneath us on many websites, it says click here for Ira's free information. Do so and we'll get everything to you. I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.